This year has been especially encouraging, I think, as far as you've been concerned. The economy has continued to grow at a pace that has exceeded your peers in Latin America. The implied volatility of the peso has collapsed, meaning that trader bets on the peso are increasing for its stability, and confidence is building, and the peso, in fact, is the best performing currency of 26 emerging markets so far this year. So today you raised interest rates. That was not a surprise. That was something that you had been doing for quite some time. But now there is a bet by the market, by traders, that inflation has in fact peaked or is peaking right now as we speak, and that it will subside. It will get back to your target. So not only is this the pause maybe that refreshes that we're about to see, but is this a pause, do you think, that could go on for at least a year or so?
The last months have been good months. We had a rocky year last year. I think that a lot of the correction that is taking place has been the result of policy actions that we have taken in the monetary side, in the foreign exchange side, but also on the fiscal side. Basically, we're going through dynamics that is consistent with a one-off big inflation shock, and therefore we believe that the actions that we have taken with the information we have up to now should be sufficient to take us to our 3% objective towards the end of 2018. Now, of course, this is conditional on the information we have today, on some vague form of expectation of what the Fed will do, and so on and so forth. So at least we're expressing some confidence that what we have done is sufficient, but it will be sufficient for now until the end of next year. It's hard to say.
So even if the Federal Reserve were to raise interest rates again this year, as many in the market expect the Fed to do, and even the Fed has acknowledged that that's not an unreasonable assumption by the market, is it possible that the interest rate pause that is foreseen for Mexico could continue, could persist, even with that event?
Well, I mean, certainly it is possible. Now, it also will depend on the context, how the Fed does it. I mean, I have to say that the Fed is going through a very complex process. They have managed it really well, but that doesn't take away that they are doing something that is completely new, and we don't know how the markets will react, no? So, I mean, again, we believe that where we are now will lead us to the 3% level at some point, and we're ready to make the statement that up to today we think that is sufficient, but we will be very vigilant.
So speaking of the Fed and your own august institution, right now the volatility in the Treasury market and the volatility for the peso by historical standards is right now very low,
yes.
Which is an expression of trader confidence in monetary policy. It's an expression of confidence in the currency, and it's an expression of confidence in the bond market. Is the market optimistic, or would you say realistic?
Well, I mean, you have to ask the market. I mean, I think in general the markets have been acknowledging what we have been doing, and in a way, I think that we coincide in many aspects. Now, sometimes markets are too pessimistic, sometimes markets are exuberant, and what we need to do is to keep a cool head. So that's what we're trying to say.
You're not unsettled at the moment by what the markets are doing right now, is that correct?
Yeah, no, I would agree that I'm not unsettled.